Hello everyone, I'm Kim Drusch with Century 21 Award, and today I have a very special guest for you to meet. This is Doc Spaulding. Hi Doc.
Hi Kim, nice to see you.
Nice to see you. It was great for you to come in. Everyone, I just want to tell you that my VA buyers right now, and people who didn't know they qualified as a VA buyer, are asking me a ton of questions. I don't have the answers. I don't speak loan. Doc does. So in just a moment, Doc and I are going to get comfortable and we're going to go through the list of questions that you may have. So stick around, I'll see you in a minute. Okay, so Doc,
Yes.
great to sit with you because I have these questions and they come up over and over again. So the first thing I want to know, who qualifies for a VA loan?
Any veteran will qualify for a loan. They can have been a Marine, Navy, Coast Guard, Army, Air Force. As long as they have served our country, they are eligible for a VA loan.
Active duty as well as?
Active duty as well as retired, correct.
Okay. Okay, perfect. So they can do this only once in their lifetime, correct?
They can do it one home at a time, but they can do it multiple times throughout their life. The first time there is a funding fee of 1.15%, and that increases each time they use the loan, unless they have a disability. If they have a 10% disability or more, there is no funding fee.
Okay, perfect. So that comes to a question that I have. Mortgage insurance. On a typical loan, less than 20% down, the buyer is a little surprised because their payments higher every month than they anticipate because there is mortgage insurance, correct?
That is correct.
So does VA have this?
VA does not have any mortgage insurance, which is wonderful. They do have the funding fee. We roll that into the 100% financing that we're doing. So it's 100% plus the 2.15%, if it's the first time they've used it, is how much they will have in a total loan.
So let's give just an example, and I don't want exact numbers, but let's say they're borrowing $300,000. Their funding fee, do you have a round number?
It's going to be about $6,500.
Okay, so now they've borrowed $300,000 plus the $6,500.
Correct.
Okay, and so that's their new loan amount, correct?
Yes, that is correct.
Okay, that makes sense to me then. What other fees does the borrower pay then? What are they going to have to come out of pocket before they go purchase that home?
Well, they have no down payment. They will have their closing costs, which can either be paid by the seller or in many cases we can adjust their interest rate and cover their closing costs as well.
So for example, just give me a roundabout number as to what a VA interest rate is. Not
Currently we're at about 3.625.
okay. So if they decided to roll their closing costs into that, then the interest rate goes up and they just pay a higher interest rate, but it means zero out of pocket, correct?
Absolutely correct.
Okay, perfect. Wow, 3 point something? That's
Yes.
unbelievable.
We are living in a time that we'll never see again. Every veteran should be taking advantage of this program. It's meant for them. They deserve it. They've worked hard for it. They've defended our country. I'm very pleased that we can do these loans.
I mean, think about it. I don't think generations to come are going to see these rates again. Aren't you in agreement with that?
Oh, absolutely. We never thought we would see the rates that we are seeing, and they are once in a lifetime.
Wow, this is just amazing. So, from a realtor's perspective, in the past there's been a bit of a stigma against a VA buyer for a couple of reasons. Number one, there was always the worry that it won't appraise because VA appraisers are a little bit tight with their numbers and sometimes they're unrealistic. I'm not seeing that these days. Are you seeing much of that?
No, not at all. We're seeing across the board consistency in appraisals. Whether it's a conventional, an FHA, or a VA, they seem to be consistent in price.
Okay, the other thing, hang on, let me clear my screen here. The other thing that I see also is with respect to appraisal fees, I'm sorry, with the appraisers coming in, it used to be they had this laundry list. Now, they're going to address some items that the seller is going to have to repair, correct?
Anything that is health or safety will have to be addressed.
Okay.
Most everything else is fine.
So if those are called out by the lender, can the buyer cover those, or does the seller have to pay for
No,
that?
we now can have either the buyer or the seller can cover those costs.
Okay,
Or
so
they can
there's
negotiate something.
there's flexibility that didn't exist in the past, correct?
That is correct.
Okay, well, that's awesome, that's great to know. There was one other thing I was gonna ask you about the flexibility and the stigma. I'll think of it.
Well, let's talk about that for a minute. In the past, sellers were obligated to pay certain fees
The
on
non-allowables.
behalf of the buyer.
Okay,
That's
now-
correct.
What that is called is the VA non-allowable fee. And some of the sellers have been afraid of taking VA buyers because in the past, these fees were a few $1,000s. And they were nervous about taking that on. That reduced what they would net on their home, correct?
Absolutely correct.
Okay, so now, what are we looking at?
As long as an origination fee is not charged, and we at Wells Fargo do not charge origination, those fees are not passed on to the seller.
So
But
are
they
there some
retain-
fees?
There are no additional fees that are passed on. Occasionally, we see two very small fees that are non-allowable passed on, which total less than $300.
Okay, and how do you know if your loan will have them or not? Who determines that?
This is determined by the escrow company.
Okay.
And the escrow company will decide whether they charge those fees or not. Some do and some don't.
So would it make sense for the realtor to double check with whatever escrow is handling, whether they cover those, whether they have those fees or not?
Yes,
Okay, because if they do have those fees, then in the purchase contract, they're listed for the seller to pay not to exceed, let's say, $300 for VA non-allowables, correct?
yes.
Okay, so let's recap a little bit. We don't have the huge seller fees, the appraisals are more realistic. We don't have that long appraisal list that we used to,
Mhm.
it's just the typical health and safety that we find in FHA loans, correct?
Correct.
Wow, so it sounds like it's a great deal to go VA right now, correct?
It is.
Okay, the one thing I need to know is a lot of lenders can do a VA, but I've heard there's something special about Green Path, a division of Wells Fargo, and what you do for the VA borrower.
Yes, we do have a special program that I'm very proud of, and that is we have no lender fees. There is no application fee, there is no origination fee, there is no there is no lender fees of any kind, processing or underwriting. So we have no fees whatsoever, and we also have the most competitive rates in the industry.
Well, under 4% right now is amazing,
Yeah.
amazing. So I can't think of a reason why a VA buyer wouldn't want to jump in this market.
No, I
correct?
wouldn't either. I think that they need to be aware of the program, how much they can buy for how little. It's a terrific program.
That's awesome. Well, Doc, I really do appreciate you coming in and explaining this. I know a lot of people are a little embarrassed because they don't have the information, so they're uncomfortable making the phone call. So I think you've helped a lot of people out today, and I really want to thank you so much.
Well, thank you
For
for
coming
having me,
by.
Kim.
So great. So if you need a loan, it's on the screen. It's Doc Spalding, Green Path Funding. I'll give you his cell number is 858-750-9110. And thanks for watching.